join me in welcoming Imran Ghulam Hussainwala, OBE, Trustee for the Open Banking Implementation Identity. In his role as trustee, he has oversight and responsibility for open banking's development and delivery of the common technical standards underpinning the Competition and Market Authority's Open Banking Initiative. He's seconded to Open Banking from Ernst & Young, EY, where he is a London-based partner in its financial services practice. He's also EY Global's Head of FinTech. Please join us at the stage and welcome Imran. Thank you.
Thank you very much indeed. So given that we're here on a conference about identity, I'm actually going to start by introducing myself again for the third time, just so that everyone can get their arms around my surname. And please, by the way, when you do that, it's a unique surname. I don't think I've never seen anyone else that's got the same one. It's Ghulam Hussainwala. But honestly, if you meet me afterwards in the coffee break or whatever, please just call me Imran. Imran is by far and away the best way to go. So I do wear a couple of hats, and it is worth just talking about that for a second. The hat that I'm predominantly wearing here today is that I am the implementation trustee for the Open Banking Initiative, which is exactly as Tiffany and Don described. What that means is that the banks are required by law to create standards for open banking. I'm going to talk about what those are in a second. And it's essentially my job to ensure that those standards are created in such a way that they fill the objectives and the requirements of the Competition and Markets Authority order. And that order is as a result of an investigation that they undertook into retail banking in the UK. It was approximately a 2-year investigation at which they identified certain areas that they felt the market needed to change, and open banking was one of several remedies for doing that. So it's essentially my job to ensure that is done in accordance with the spirit of the requirements as well as the letter of the requirements. The other hat that I wear is, that, as he says, I'm the global head of FinTech over at EY. But it's really interesting that all the time that I'm spending with FinTechs and all the innovative new ideas I saw them coming up with, everything from AI to blockchain to cryptocurrencies, etc., it always, for me, came back down to data, and it came back down to transaction data, and that brought me to open banking. So this, I feel, is a fantastic catalyst for that sector, and of course is fully aligned with what the CMA are looking for, which is a market for financial services that has got more innovation and more competition. So that's effectively me. The convergence of open banking and identity is undoubted in my mind, but I do not have all the answers. In fact, only yesterday I was speaking at a conference about open banking, and very quickly in the Q&A afterwards, we moved from open banking into identity and to digital identity. Here I am at a digital identity or an economics of identity conference, and we're moving into open banking. So I don't have all the answers as to how you tease these things out or indeed converge them together, but I hope this conference is fruitful in moving us all forward on that. So what is open banking? So, to some extent, it has been for a while now the best kept secret in financial services. But let me try and explain a little bit about what open banking is. Open banking is an initiative to allow consumers to take control of their own data, and it's to take control of their payments, and to do this in a safe and secure way. So what we are doing is we are building a set of standards, and they're based around APIs, that in the early part of next year are going to allow any third party, whether it's a fintech or an existing financial services player, to, with the permission of the customer, to access that customer's transaction data and many of the other data elements associated with their online banking channel, and execute payments on their behalf without the customer needing to do that directly through the bank themselves. So that's one API that's going to cover approximately 80 to 90% of the UK market, and that will go live in the very early part of next year. And that will be the start. In actual fact, it will be a start of additional functionality that's going to broaden out into many other different payment types. So that's effectively what open banking is. Now the question is why? Why are we doing open banking? And the reason that we're doing it, I think, stems from some truisms. They're only relatively recent truisms. I think they've only really come about in the last 5 to 10 years. And it starts with, number one, that data is valuable. I think that's really been brought to bear by the tech companies and the advent of smartphones, and indeed the amount of money that's flowed into digital advertising. But this concept now that data is valuable has become very important. And the second concept is that the data the bank holds on the individual belongs to the individual and not to the bank. And so if that individual wants to use that data for their own benefit, they should be able to. Conversely, if they don't want to use it for their own benefit and they want it locked away, they should also be able to do that too. They should be able to control their data. But it's valuable, and it doesn't belong to the bank, it belongs to the individual. And it's because of that truism that when I look around the world, not just in the UK, but around the world, for me, open banking has got a sense of inevitability about it. And I see it popping up in different guises, but popping up in lots of different countries. So in the UK, we are pursuing an open banking strategy that is based on European legislation. It's based on Payment Services Directive 2 and GDPR, which brings together the payments element and the data element. To me, that's open banking. But what we're doing in the UK, which is nuanced, is we're pursuing a standards-based strategy. So one API that will cover the entire market. That's really what we're trying to do here. In Europe, you have a form of open banking that I would describe as mandated because of these two pieces of legislation, but it's not standards-based, at least not at the moment. And it could result in much more of a fragmented market. That's what the regulation allows for. But we are already seeing voluntary or commercial initiatives to try and increase standardization across Europe. So I don't think it will stay fragmented like that. But in the UK, if we've got standardized open banking, in Europe, we've got mandated open banking. In Australia, they've got another form of open banking, which I describe to people as data-led open banking. In the US, you're seeing open banking bubble up, but not with a regulatory onus, much more of a commercial onus. It's almost a voluntary form of open banking. And then, of course, you go to the big beasts like India, where essentially with the Aadhaar project, where I'm sure you're all familiar with the way that biometric identity is centralized, you've essentially got government-sponsored open banking. And then in China, you've got yet another form of open banking, probably more embedded or walled garden form of open banking. But all of these efforts are putting data at the center of what people are doing. It's probably the first time that I've seen in my life where we actually are seeing digitized financial services. As opposed to digital financial services. It's been digital for a very long time, since the 70s, but actual digitized, so embedding it in lots of other user journeys, propositions, and allowing other companies to look at it too. So what are the kind of things that it's going to allow consumers to do? And I should actually say, in the UK, it's not just consumers, it's also SMEs. And SMEs are probably one of the most underserved segments when it comes to financial services. So including them in this, I think, is really fantastic. But the kind of things that it will do, well, number one, it's intended to introduce competition innovation to the market. That's what the Competition Markets Authority order is designed to do. But what does that actually mean? You know, break it down, make it simple. It will make it easier for consumers and SMEs to find the right financial services product for them, right? Many people, individuals, SMEs, are using the wrong current account, the wrong credit card, the wrong mortgage draft, the wrong mortgage, the wrong overdraft, and so on. And this will allow them to at least identify the right product for them, actually using their own transaction data to run scenarios over lots of different market-based products. Then the next thing it will allow them to do is to make it easier for them to switch to the right product. And that could be a wholesale switch from one current account to another. It could be unbundling parts of the current account. And there are a whole host of propositions that allow that to happen, which I can go into in a lot more detail. But so if it's easier to find the right products and then to move to the right products, these are what I would call kind of like first order benefits of open banking. But where it gets really interesting is actually when you move into what will this enable. So if we all agree that there is value in the data, what other things could this enable? And at the moment, we don't know. And we're not trying to prescribe that. What we want to do is create an environment where actually many third parties, fintechs and others, can actually come up with innovative propositions and then leverage the information that sits with the banks via these standardized APIs, accessing it for free, but with the customer consent. So we'll see where that goes. But some of the things that kind of excite me and interest me more in that space, there's a whole host of ideas around financial well-being. Many people are spending too much. Many people want to know how much it is safe for them to spend come the end of the month. For many people, you can't make sense of your transaction data, your statement data anymore. Contactless cards have been incredibly popular, and what was a 2-page statement, at least it was, for me 5 years ago, is now like a 30-page statement. And making sense of all that kind of stuff is really important and something that will become a lot easier under open banking. And then you actually can start drawing conclusions that if you understand that part of a person's life better, you don't need many more data points to help them understand how to get onto a better utilities deal, a better broadband deal, a better telco deal, and in fact better insurance deals as well. So open banking is about open data, and the current account is probably the hardest but the most important one to do first. Now, none of this is going to work unless it's done in a really safe and secure way. So whenever I talk about the transformational abilities of open banking, I always need to talk a little bit about how we're building safety and security and privacy right into the architecture of what we're doing. So just a few of the items that I'd like to call out in that sense. First of all, none of this happens without the consumer's consent. GDPR has been very helpful at laying the groundwork as to what that looks like. And when we talk about architecting consent into open banking, we're not talking about 30, 40, 50 pages of T's and C's. One page, clear English, simple to understand, and that is, and the customer has to give explicit consent for specific use cases. The second thing is that we are not looking for a customer to share their password. We are not creating an environment which is an extension of what people call screen scraping. We're not doing that. What we're doing is that our fundamental view is that the credentials that the bank has agreed between the consumer and the bank, so password and username and various other token elements, will sit with those two parties. The customer will never have to share that information with any other party. Next thing is that customers, as I said, need to control all of this. So they will be able to see at both the third party end, but importantly at the bank end, a list of all of those different innovative third party companies that they have shared their data with. And if they want to revoke it at any point, there's one central place where they can do that. A little bit like on your iPhone, you'll have your location settings, and you can see all the apps that you've granted access to that location element in there, and you can turn them off. So a nice centralized place where all that will happen. Then the next thing that we do is we've actually created a central piece of infrastructure. So we are a standard setting body, essentially, but we have created a central piece of infrastructure, and that is a whitelist for third parties. So this central piece of infrastructure will provide digital certificates only to regulated and authorized third parties, and that's regulated and authorized by the FCA, so that when a bank receives a request from a third party, it has to have that digital certificate so they can be confident that they're dealing with a legitimate third party, not a nefarious actor. And then the final point is that we are actually also creating a customer redress framework. So we're not naive to think that it's all going to go perfectly well from day one. We will obviously hope for the best, but prepare for the worst. So what we're doing is creating a whole set of business processes that all the banks are working with that will ensure that if a customer suffers any detriment because a payment is the wrong amount, goes at the wrong time or to the wrong person, they will be made whole. If their data is sent to the wrong entity or is leaked, they will be able to trace it back and seek redress on that basis. So there's a lot of functionality that we're building around this entire ecosystem in order to get it to work. But the question really then becomes, well, what's all this got to do with digital identity? And as I said at the very beginning, I'm not entirely sure. I haven't figured all this stuff out frankly, it's not really my job to figure all this stuff out. It's my job to ensure that we get an ecosystem that's going to allow for a lot of this innovation to work. The one thing that I can say is that digital identity is something that open banking leans very heavily on. So we are incredibly dependent on identity of individuals, identity of these regulated third parties, and being able to knit that all together. And the engineers back at Open Banking have used what we believe are the most important, the most relevant, and in fact the most interoperable standards to ensure that that can happen. But then the second piece is, well, what in the identity space will open banking actually enable? And that's where I've got a far less clear idea in my mind. There are, for many people, the source of information that sits in a consumer's transaction data is incredibly insightful, and it will clearly provide a lot of information as to what kind of person that is. Does it go further to enable that person to assure their identity? I don't know, but it could do, and it could also therefore start creating linkages with some of the other elements that Don referred to at the beginning. So I'm going to just pause there and actually leave that kind of question hanging and hope that by the end of today, I will have a better understanding of that, but with your help. So thank you.